Just as some of us were beginning to recover from the irresponsible financial decisions we made this past festive season, the Bank of Namibia announced another repo rate increase on the 15th of February 2023. That marks the 7th repo rate increase since the beginning of 2022. And understandably, Namibians took to social media to voice their concerns about the situation. So why does the central bank just continue to increase interest rates? Don't they care about their struggling citizens? The truth is, they don't have much of a choice. In this video, we'll break down why the central bank keeps increasing interest rates and what would happen if they didn't, and why you should make room for more interest rate increases in 2023. Some of you may not know what the repo rate is, or you may not have any outstanding loans, so you think it probably doesn't affect you in any way. It does. The repo rate is the interest rate at which the Bank of Namibia lends money to commercial banks. When the repo rate is increased, commercial banks have to pay more interest to borrow money from the central bank. And this increased cost is usually passed on to consumers like you and me in the form of higher interest rates on our loans and mortgages. So the repo rate determines how expensive or cheap it is to borrow money in an economy, which impacts how much money is circulating that economy. Think about it. If the interest rate for a vehicle loan was close to zero, you'd probably go and purchase that new car you've been craving for through a bank loan and drive it straight to the catch. Whenever a bank makes a loan, it creates a new deposit in the borrower's account which wasn't there before, which is essentially new money being made. So why doesn't the Bank of Namibia just keep interest rates low forever so we can all get the cars we want, drive them to the coast, and live happily ever after? The short answer is inflation. If you've been alive long enough, then you know that sadly, the price of everything eventually goes up. The speed at which these prices increase is known as inflation. If inflation is high, it means prices are going up too quickly. For example, if the price of an ice-cold beer at your favorite establishment suddenly went from 25 Namibian dollars to 100 Namibian dollars, it would probably mean you staying home this Friday and re-watching one of your favorite shows by force. But inflation doesn't just affect the cost of things you can live without, like the nightlife. It affects everything, from the food you eat, clothes you wear, rent where you stay, your daily transport, basically your entire cost of living. And that cost of living has been increasing drastically for Namibians since 2021. Putting more pressure on households who were already struggling even before the pandemic. I'm sure many vehicle owners remember how petrol prices went through the roof last year and how that impacted the prices of everything else. One of the biggest drivers of inflation is having too much money in circulation and too few goods and services. Imagine you're in a small village and there are only 5 people and 5 heads of cattle. Assume each villager has 1 Namibian dollar and the price of each cow is also 1 Namibian dollar. Now assume each villager gets an additional dollar. You now have 10 Namibian dollars circulating the village, but the number of cattle is still the same at just 5. With more money in their pockets, the people now have more purchasing power, which leads to an increase in the demand for cattle. However, since the supply of the cattle hasn't changed, they are now double the amount of Namibian dollars chasing the same amount of cattle. This causes the price to increase because the villagers are willing to pay more to get the limited supply of cattle. That's inflation. So having higher interest rates means less loans being taken out, which means less money circulating the economy, which finally means less inflation. It's not a perfect system by any means, because having less money circulating the economy also means slower economic growth, which is why the central bank revisits its position on interest rates every 2 months, and why rising interest rates are not a permanent situation. But for the immediate foreseeable future, financially responsible Namibians should definitely plan for the possibility of further repo rate increases. And here's why. Namibia's repo rate decisions are also largely influenced by those of our neighbor South Africa because of the one-to-one relationship that the Namibian dollar maintains with the South African rand. So when South Africa makes a repo rate decision, Namibia is never too far behind with a similar one. South Africa announced a significant 50 basis points repo rate increase last Thursday, so Namibians should definitely plan for a repo rate increase when the Bank of Namibia announces their next decision on the 19th of April 2023. So if you're thinking about taking out a new loan this year, that's definitely something you need to consider. What's your opinion on the recent repo rate increase? Let us know in the comment section below. If you enjoyed this video, don't forget to show us your appreciation by leaving us a like below as well. And until the next time, remember, learn, connect, grow.